I'm Motley Fool Canada Senior Analyst Nick Seipel, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing how to prepare your portfolio for a stock market crash. My guest today is Hidden Gems Canada lead advisor, Jim Gillies. Jim, thanks for joining me.
Thanks for the invite, Nick.
So, Jim, investors are bombarded all the time in the stock market, but maybe particularly recently with some volatility, with scary headlines about impending recessions or downturns. Practically speaking, what are the most important steps an investor can take right now to prepare for a potential crash without panicking and totally turning over their portfolio?
So my thing is, this is a mindset issue. Okay, so I'm going to lead off with a quote from my favorite science fiction author, Robert A. Heinlein. And the quote is, "Don't ever become a pessimist. A pessimist is correct oftener than an optimist, but an optimist has more fun, and neither can stop the march of events." What I like to do here, and we're preparing. I mean, remember, the market pessimists have called for 75 of the last three crashes, kind of thing, right? So move slowly. Don't react to every piece of alleged market moving news. Remember that crashes. We're talking crashes here, not a downturn or a correction, but a crash. Crashes are rare events. Okay. You should be focused on the day-to-day grind, a grind that is up and to the right, I will point out, rather than bolstering your portfolio or worrying about an event that may not happen for years. A good example is after 2009, the global financial crisis. I could point you to some very prominent investing groups who were fully hedged, waiting for the second leg of the downturn through to 2016, 2017. Spoiler, the market was up about 2.5 fold over that period of time. So, you know, realize that you're going to go through a downturn, a correction, a bear market, what do you want to call it? Those are natural parts of the cycle. 10% drops happen about once a year. Drops of 20+% happen once or twice every 5 years. Since 1950, there have been 13 drops of 20% or more. Average downturn, I think, is about 33%. It's going to happen. The way you get around that or work with it is have a long-term mindset. With very, very few exceptions, every stock I recommend or buy, assume a minimum holding period of 2 years. 5 years is better. I don't even look at a company for 2 years unless something really, really strange happens. And if you can do 5 years, think about 10. Money that you need near term should be either in GICs or a cash account or money market account. Um, Maybe a little weird to say, embrace the suck. Okay. It's awful to experience prolonged down markets. I've done a few. But you know it's going to suck going in. So just breathe, take that long-term perspective, and remember that the prices at this time, these are going to pass, and ideally they will be worth much more in the future. Only sell if you have concerns about a company, like over levered or whatever, that you're worried about that, or if you think their business is going to fall apart. But don't sell just because you're scared or because you're looking to time the market. You won't do it. Be slow again. Be slow to act always.
Yeah, Jim, that's great advice on preparation. A reminder that if you're going to be a long-term market participant, volatility and downturns are table stakes, but over the long
Hmm.
term, the stock market is the greatest wealth creation tool known to man. So let's fast forward from preparing for an eventual market correction to we're in the moment. The market actually has taken a dive, your portfolio is red, everything is down. What should our mindset be as investors during a crash to ensure that we can come out ahead on the opposite side?
During downturns, crashes, if you will, continue to be a regular saver. Okay, could throw a dart. 10 to 15% of your paycheck in any market condition. Continue to pay yourself first. Always be saver, saving. Be a saver throughout the market cycle. Be a regular investor, even if you're doing nothing beyond every 2 weeks you're adding to an S&P 500 index fund or a TSX index fund. Dollar cost averaging into the markets is a good way to stay connected and to the investing process and to avoid the temptation to try to time things. Speaking of timing things, you will never catch the top or the bottom except by accident. So don't bother even trying. Adding cash, adding shares, adding to indices, deploy your accumulated funds into your watch list of companies that you build before the correction at a reasonable and measured pace. So you don't want to throw in all of your money into your favorite stock, when it's down 10, 15%, maybe do a little bit here, a little bit there. Take your time. And remember, downturns pass. Okay. You've already built a wish list. You're going to be deploying. Remember that downturns pass. That wish list will allow you to add to your favorite companies at better valuations, you know, and essentially, I'll give you an example. During the pandemic, when the market was down 35% in, whatever it was, 6 weeks or whatever, and everyone was panicking, a company called AirCap, which is an aircraft lessor, they lease aircraft to famous airlines, you all know. That company got shredded. And, if you just ask it, and I think it bought them at $14. Today it's about 130, 135. If you just said to yourself, downturns pass, pandemics pass, I think we'll probably still be traveling by air when this is over. You probably did pretty well. And so I'll just leave it at that. That's what your mindset should be. This is an opportunity. It's not a time to be fearful.
Thanks, Jim. Great words for investors ahead of whatever the next market crash could be. Could be next week, could be next month, could be 5 years from now. Thanks, everybody, for joining us for this edition of the 5-Minute Major. A reminder, if you want more stock ideas from us, maybe like AirCap that Jim mentioned, click the info icon in the upper right-hand corner of your screen. Until then, until next time, thanks for joining us, and Fool on.